Options are financial tools that give investors the right, but not the obligation, to buy or sell an asset at a set price. Think of an option as a contract that locks in a specific price for a future transaction. In the stock market, a single standard options contract represents control over 100 shares of the underlying company. There are two main types, calls and puts. Each contract has a strike price and an expiration date when the deal ends. Unlike buying a stock where you own the company, options are temporary contracts that lose value as they approach their expiration date. Options experience time decay, meaning their value often drops significantly as the expiration date gets closer. Because they involve leverage and expiration, regulators warn that options are often unsuitable for inexperienced investors. Always research thoroughly before trading complex instruments. Thanks for watching, and remember to keep learning about how markets work.